Yo, good morning, traders, and welcome back to another episode of Market in the Morning. I'm your host, Kevin Dubrisky, and we've got a great episode ahead of us. We're going to be streaming it from 8:20 to 10:30, and at 10 o'clock, we have JOLTS. That is job openings, and it gives us an insight into how the jobs market is looking in the U.S. So we usually get some type of impact in the market. Me in the lab will be covering it very soon. What's going on, guys? Good morning, team. Good morning, Ozzy. Welcome. Hello, Andrea. Good morning, Teddy. Guys, drop a good morning if you're ready to make some money today. We're going to set you guys up with some trade setups. We're going to cover any big breaking news headlines. We're going to give you the best insight available. So make sure you hit that like and subscribe button because Market in the Morning starts right now. All right, guys, so let's dive right into it and see where markets are positioned. Now, I do want to cover real quick a recap of yesterday. Now, yesterday, Nalab called out some phenomenal shorts on gold. He also called out the longs on ES, and I also gave you guys a great play on the NASDAQ. The first trade setup was, do you guys remember, it was a 15-minute support area that we created. We double bottomed, and remember, our fundamentals are still bullish, so we're just trading with the trend. We never want to trade against those fundamentals, especially when they're this strong. So what happened? This first trade set up 2-1, banger right away. We left. You could have left some runners. It continued 250 points to that take profit of pre-market high. And then it did continue another 100 points from there, which is phenomenal. 350 total points from that original entry that we called out here in the Market in the Morning show. So phenomenal there. Hopefully today we'll find some other great trade setups too. We see that overnight we did not create a new all-time high, but we're still very bullish. We did come back to this zone and we respected it, right? Price is respecting near this 30,350 on the NASDAQ. So let's dive into our market dashboard and see, has anything really shaken markets overnight? Guys, we can get started with the NASDAQ. I know a lot of NASDAQ traders are NQ out here, so we could see what's moving markets. NASDAQ pops on Alphabet unveils 80 billion AI capital raise. So I'm sure you guys heard about that as well. A lot of AI spending in big tech, which is nothing new. But now what Google is looking to do, Alphabet is parent company of Google, is looking to do is spend this 80 billion to try to make AI cheaper. Right now, some people might think right away, oh, that's great, they're making it cheaper for us. No. They're making it cheaper for them. A lot of us who are already using AI on our day-to-day basis, we're not using that amount of energy or that amount of AI that a lot of these big companies are, which they're seeing that crazy capex, right? We see the top six tech companies spends over $700 billion in capital expenditure for AI in the past, and this year alone. This year, they're projected $70 billion in that spending. So let's see what's moving markets. We could hit one of these candles up here to see what was driving us to those all-time highs. Middle East de-escalation headlines after earlier escalation and oil spike risk off phase. Hour shows relative small net gains after wider intraday bar whipsaw range. Tape reaction to shifting Lebanon, Hezbollah, and Iran headlines, and oil market volatility. Now, something we like to cover in these Market in the Mornings episodes is where is oil positioned right now? Because it's important to understand the headlines, but it's also important to understand how markets are actually digesting those headlines. So let's pull up the NASDAQ. Let's pull up oil and see if there's anything that is notable on oil right now. Are we trending back lower? Remember yesterday, guys, we are near the bottom of our range on oil, near that $80. And look at that. We were at 86. Yesterday was a bullish day on oil. We continued higher. Let's see. Look at this, man. We continued, and that was also another call out. Now, I didn't say, oh, we're definitely taking this trade on oil, but with market, we were able to see when this pop happened, we found the headline that came out right here. And I'm going to show you guys right now exactly what I'm talking about. So look at this huge pop on oil yesterday. This is it. New York session, June 1st, Monday. You see how you could hover over it and it's going to give you the information? Well, now we could click the actual candle and it's going to tell you what actually moved oil that strong. Yeah, no major war headlines today. That's always a good thing, right? Until, we're in the middle of a trade and we get one. Crude spikes on Iranian threats to fully block Strait of Hormuz, right? Again, we were covering this live, so we knew what was going on. But if you missed yesterday, you missed any day, market's going to be able to fill you in like that. Headline escalates from maritime easing comments to explicit blockade threatens within the hour. Brent and WTI futures reported rising more than $5 on Iran negotiations breakdown, and U.S. manufacturing data later supportive of demand, but move started on supply risk shock, which again, that was this big move, was supply risk shock from the Iran war, from those big headlines, from things picking up with the blockade. If there's a blockade that puts a halt in supply, like we went over yesterday, guys, if there's a halt in supply, the price goes high. That's a good bar right there, guys. All right, let's see what's going on. Any headlines? And what's great too is it doesn't just tell you what happened, it has the headlines of what happened. Iran backed forces threaten to block Strait of Hormuz, aim to punish Israel and allies, right? And if you don't know, okay, well, what does this really mean to me? What does this really mean for markets? You hit the brain icon, it's going to break it down for you. Threats to block the Strait of Hormuz have sharply raised global energy and shipping risk premium, reinforcing an inflationary, stagflation prone backdrop and risk off mood. Markets would likely price higher oil, softer global equities, stronger safe haven demands, and pressure on long duration bonds. Now, what we're seeing right now is a major shift, and it's called a disconnect. We have a disconnect right now with what's going on in bonds and yields and what's going on in the stock market. A lot of times, yields move higher, stocks are moving lower because higher yields call for these big companies to say, "Hey, listen, you could save a lot of money. You could lock in right now a 5% gain over the next 30 years, or you could invest in a risky AI stock that could be gone by then. It could be gone in 5 years." So normally, higher yields lower stock prices because higher yields are a stricter safe haven. You lock those prices in. So, it sort of makes you think, are these big companies really putting that much trust in these AI stocks? And how big of a crash are we going to see when things do start to reverse? So, oil, we were able to see that was going on. At this point with oil, you can see where we are. We have started to trade lower again. I could take a look at the hourly time frame for you guys, and we could just see, okay, so this area, so this was a resistance point, resistance again. We broke it, it was support. Now we have a new support area right here on gold, on oil. Yo, good morning, Garrett. What's going on, man? Good morning, everybody. Hope you're all doing well. We're going to be marking out some oil, the NASDAQ, S&P, and of course, gold. Give you guys some great trade setups. And don't forget, guys, today at 10 a.m. Eastern, we have JOLTS. That is job openings and labor. Job openings and what is it? Job openings and labor turnover. That's it. Alrighty. So again, daily time frame on oil. Now, in my opinion, guys, oil is in a no trade zone, right? We know that the best trades and best outcome of these trades comes from shorting the highs, right? Shorting at the major highs. This was a beautiful example over here. Tuesday, me and the lab covered, and then even Wednesday, me and Imre covered and said, listen, we're at the high of our range right now. Expect some type of catalyst. And what happened that day? We literally got that catalyst that Trump came out and said, oh, the peace, something about the peace deal being very close and final works. Hey, guess what? We can click it. What moved markets that day? Let's check it out. Let's see. What are we looking for right now? We're looking for, this is the 19th. The 19th. Here we go. Crude sold off sharply, freshly built geopolitical risk premium after Trump said planned Iran attack was canceled, right? We were just talking about this. They cancel attacks. They have a peace plan. Reacted to those highs on oil. Technicals and fundamentals lined up just like that. At this point, we are not at an extreme right now. Look at where price is trading right now. This would be an extreme. This would be an extreme. We see support here. Even over here, we sort of ended up lifting back higher. At this point, I would not consider this an extreme. Our extremes are down here near 80, right? Think of it from a psychological standpoint. If oil breaks below 80 temporarily, people are going to lose their mind thinking the war is over, things are better, premiums are looking lower, this is amazing. And then boom, news catalyst that comes in, we're attacking them even harder than before. We want the strait to be in our control. We want their uranium. We want this. We want that. So that's when those headlines come out. You could time the headlines just like you time the market. That's how hand in hand these things go. What is your bias on NQ intraday? Listen, man, before even opening the chart, I'm going to tell you it's bullish. Why? Because we've been here every day, but because we know fundamentally we are leaning bullish. We just made all-time highs yesterday, and we have been extremely, extremely bullish. A lot of tech companies are doing well. AI companies are flying. Look at this here on the daily time frame, ladies and gentlemen. From that March 31st, the NASDAQ is up over, the NASDAQ is up over 32%. A historical bull run in less than 2 months. This is wild. Ladies and gentlemen, put your hands together. We have the one and only Nalab joining us right now. Nalab, good morning, brother. How are you?
Morning, Kevin. Sorry I'm late to the show. I hope I know you've been holding it down though.
Bro, always holding it down, man. We're holding it down and we're having fun going over some levels.
Absolutely.
Obviously, we're still bullish. Not much has changed overnight. We didn't get any new war headlines, but we do have JOLTS at around 10 o'clock.
Yes, sir. So I'm ready. I'm ready to break it all down and ready to have a great trading session. We do
Hell
have
yeah.
jolts, as Kevin's mentioning, and you can see that anything higher above reading is going to be bullish for the dollar, which is the currency in focus over here, because it's more job openings, more opportunities. Labor market is growing. That's taken as is that resilient labor markets. When job openings are shrinking, that means the labor market is under pressure. Companies are closing their jobs openings. I want you to keep in mind that job openings isn't the only focus for the week. The main focus, the main meat and potatoes for the week is NFP and unemployment rate, which is on Friday. So we must keep that in mind, is that yes, this is going to provide volatility, but it's not going to be substantial as compared to NFP, unemployment rate, because those are the job numbers that the market is really watching for. And one of the main reasons is, besides those being high impact, is that JOLTS job openings isn't always the most reliable. If you look at a number like 7 million job openings, maybe probably a big subset of those are stale listings for jobs that are already filled and have been open. A lot of these companies will keep these openings up for months on after they've already hired them. So you can see it's not always the most accurate representations of how many jobs are available. That's why the market focuses more on what the rate of unemployment is. What does initial jobless claims look like? Well, how much jobs are being created in the private sector versus non-private sector? So all of this together paints a big picture of how the labor market is performing, and JOLTS job openings is just one part of it. It's a key part, but it's just a part of it that holds lesser weight to what the markets are expecting and what they're more focused on. So that's one thing that we must keep in mind, is that data is happening at 10. Should we do some quick analysis, right? It's at 10 a.m. and then we'll do some quick analysis, because we've been running, now we're doing these streams thanks to Kevin from 8:20 a.m. to 10:30 a.m. basically every single day.
Yep.
So lots that we can go over. Kevin, could I share my screen?
Bro, go for it.
Let's
Absolutely.
do it, man. And I so much positive feedback on people telling us that they love us doing the streams for longer,
Bro, that's awesome. Happy to
right?
hear that.
Yeah. So one thing I want you guys to keep in mind is gold currently is in and is retracing a bit, but this doesn't mean that gold's intraday bearish bias is now gone, because we have to pay attention to the actual fundamentals in focus, or what's happening, right? Is blockade still existing? Yes, it is. Is there still tensions happening? Yes, they are. Ceasefire progress has been cut, right? So you can see all these impacts. On the other hand, what could flip it on bullish is Hormuz reopening, which currently is not happening. You've seen back and forth going on. Iran saying they had complete control of it. It's these blockades. So all gold is doing, if we look at it since the start of April, we have seen gold has been in an active bearish trend on the intraday time frame, creating new lower lows. And this is just a pullback that has come from these lows, which is quite normal when you're pushing lower. You're going to get these pullbacks before you continue. And where is the next logical area on the higher time frame gold can head off into after this area? It's this, right? It's this price point, right? Price zone here that we tapped into yesterday on Friday, and the market rejected. So gold is still bearish. And this is where traders get it confused, is just because gold retraces this much, we came out from a new low. So we have to keep that in mind. And you may get instances where you see a deeper pullback. But if you understand the macro environment that this market is currently trading off of, you know that any escalations, which is likely to happen, are going to bring outflows into gold, outflows from ES and US equities, and then inflows into crude oil. That's the environment that we're currently in. So that's important to keep in mind when you see moves like this, is that anything in the counter trend, you should be taking very vigilantly. You should be getting out of it and not expecting to get too much out of that position, because you're going against not only the trend, the macro trend. So now gold pushed into this retracement area that we were looking at. And if we break this, then we could see controlled downside, given that sellers got into their positions here, right? We're breaking below this price point. Now, if we were to break this, I would look for something where you see price action develop, you see breaks below here, and then in this controlled manner in the lower time frame, eventually you make your way back down to these lows from Asian session last night, from the Asian Pacific session. So you can see in this case, what this would show us is this sort of price movement would be aligned with this rejection of this higher time frame zone at 4,600 basically. And then it would tell us, okay, perfect, we can head down. And given that we also still have about an hour and 20 minutes before JOLTS job openings is released. So that's just something to keep in mind, is that you'd be looking for something like this sort of structure to show you, yes, this resistance got respected. And then this is what the intraday time frame would look like. Then you see breaks of this low, and then you'd end up back to these lows, because on an intraday basis, gold is in a bearish retracement, as that's where the fundamental factors have been lying since mid-April. And even here, this movement up was just temporary based off of the massive outflows that we had from 5,500 down to 4,100 in a matter of hours. So you can see, in respective to that, eventually, if given this continues and these escalations continue, gold would end up coming back down to these price levels, because that's the trend that we're currently in. So instead of fighting it, and instead of predicting and thinking, oh, this is going to be the bottom or this is going to be the top, why don't we just wait for confirmations like we just went over, like that sort of price movement, or even taps into a higher time frame zone, as we were even talking about yesterday before we called out those beautiful sells on gold that were about 400 pips, was that either we got a break, a tap into this area, and then we look for sells, or we were going to wait for those breaks. And that's the same sort of breaks that we're waiting for here, is that if we were to break below here, then we're going to see where can we head down to. On ES, what did I say yesterday? Kevin, come on, man. Come on, dude. That was a beautiful trade we called out and discussed. Is we were talking about ES coming down to this area for us to take buys. And the reason we were looking to take buys was because ES on the intraday and higher time frame is bullish. And it's bullish because of lots of factors driving it, such as the AI optimism. You see markets constantly pricing in optimism despite being in a war. And then there's things that could flip it and give it short-term outflows. We mapped it out. What we ended up getting were those short-term outflows due to headlines that came out. And we can quickly go to those headlines. So we'll open up the market integration with TradingView, and this will soon be available to all market users for them to try out. We're going to be doing a ton of things with it. So just make sure to stay tuned. We're going to do an announcement on when it's actually ready and available to all users. Some of our loyal users, our day one users, have gotten access to it. So they've been playing around with it. I've seen a few of them talk about it on social media. But we had these headlines come out yesterday where you can see Iran's negotiating team has stopped messaging exchanges with U.S. through mediations over attacks in Lebanon. Remember, Israel was doing attacks in Lebanon, and then here threatens to block Strait of Hormuz. Bab el-Mandeb aimed to punish Israel allies. So you can see the impacts that we had, and it led to these outflows right over here. And I was talking about it. I'm like, guys, this is going to be short-lived. We're going to look for buys, and that's exactly what happened. I took these buys right down from these lows, and I stacked positions as market was making these lows and over here as well. And I rolled them right to these all-time highs, and I exited right over here. So it was a quick, easy intraday trade based off of fundamentals. We knew that those escalations were not going to hold weight. And then guess what happened? Guess what happened right over here? And I'm going to tell you something. I was at the gym. This was like during 1 p.m. when I take my lunchtime, and I had my take profit at these highs. 5 minutes before Trump came out, I had a feeling, I'm like, I'm going to move my take profit into all-time highs. And literally 5 minutes after Trump came out, this is when Trump came out, and I let it run. And it just ran, and I exited at all-time highs. And then I waited overnight. Overnight, I was expecting ES. I thought ES was going to retrace a bit further into here, so I didn't take a position here. But that's actually my fault. I should have just taken it because the zone got retested again. So now what we can look out for is the following. And either ES continues back to this high from here, but that's not the type of trades I like to take. This, in my opinion, would be more of a B type setup. I want to take those A plus type setup. So let's map those out now. And that's what's important, is that we take the highest probability setup that's going to give us a much better risk reward and probability in winning this trade. So one of them would be, we know that this zone is held. So let's see if we can get, when New York Stock Exchange opens at 9:30 a.m. Eastern, to continue to push down into here, liquidity move, grab some buy orders from here before we head back into all-time highs. Another very great area would be we push down into here, into 75.50s, push up, or third area. This is this amazing. This is A++. This is your, if you eat steak, this is your Wagyu. Like you're really gonna want to execute here or look for buys and keep your eyes open. Yes, it's a bit far away. It's about 100 points away, 80 points away. So we're going to take it level for level. And you can see how clean that trade played out yesterday that we called out. It was a beautiful 1 to 3 risk reward to these highs, and then higher about 1 to 4 I caught. This played the same level again, played out overnight in the overnight session, but I didn't personally take this. However, we can go over it. The confirms were, thank you, man. Yeah, TradingView widget, super sick, huh? Appreciate it. We're gonna get it out to all our users very soon this week, so stay tuned. It has a calendar too, so if you wanted to look at JOLTS job openings coming up, we can open up the playbook here, and yeah, it's we'll go through that as well. But so even overnight, we tap into this area throughout the session. In Asian session, we were seeing outflows, right? We were seeing outflows from highs, which is normal. And I mentioned, whenever we see a new high created, where's the next level the market's going to retrace to? It's either a previously known demand price point, or it's going to create or consolidate before it pushes higher. In this case, we retrace to this demand. Now, if I'm looking for an entry here, despite not taking one in this case, I would be looking for something like this. Right now, what I see on a lower time frame is I see lower lows and lower highs being printed, right? I think that's pretty objective over here, is that we can see lower lows, lower highs being printed after creating new all-time highs over here. We tap into this known demand area where we previously got a change of structure that I talked about. Remember this change of structure I was talking about, Kevin? Is that you want to see the lower time frame going from this to this when you're in a pullback phase. When that pullback phase is happening, you're going to see lower time frame having that corrective structure, that lower highs, lower lows. And then when you see the demand zone tapped, or you see a resistance in the case of in an uptrend, you're going to see a change in structure start to occur.
There we go.
right? Now you see a change in structure. You see breaking out of this price consolidation, and you can see now that, okay, we had buyers enter from this area. And now this starts holding. You can see maybe this price point starts holding or something, and then we head up into back to all-time highs. That's just because we got the buy orders from here. But you can clearly see the change in structure that occurs every time we tap into a known demand zone. When you're in more of a corrective phase, that's how you know that's my entry point. So these types of entries work best when you're focused on these intraday levels and higher time frame levels. On the other hand, let's go back to gold for a quick second, because gold looks like it's about to break this price handle over here and start heading towards the downside. So we will keep our eyes on that, because this is an important move as well, just because we have so much downside on gold. If gold tops off over here with the day trading bias still being slightly bearish on gold, despite market having a higher pullback target, because that could be the maximum area and we would need to break through before we can even consider possible change in structure and trend. So but if we start pushing down from here and we get breaks of this, it's still at a very valid area for us to take sells from, right? Like if you take sells here on the break of this and you start riding this down and structure starts shifting, so like let's say this breaks now and you see something like this happen, then you know, okay, that's safe confirms for sells. Like I know we've just broken from the structure, we've consolidated here, but if we were to like snap back into this range, let's say price does something like this and then instantly comes back here and now starts doing this, that's when you'd want to manage your position, right? You don't want to be too attached to a position. You always want to think of different scenarios, and that's how you should go into a position is, hey, what does my exit look like?
Yep.
What am I comfortable losing? If you go into a position not knowing how much is on the line, you're not prepared for that trade. It's the same as going into a position without looking at market sentiment or understanding what's in focus or understanding even what could flip the current bias that I have right now, right? You see Flip Watch here. This is also coming out to all our users sometime this week, probably in the later half of the week. So we'll be releasing this where events are always happening. The news feed is always populating with events, but there are certain things that can flip it, that can flip the intraday bias for short term and cause the pullback to the pullback area we have marked up, which is normal, right? That's what we're expecting, is that there could always be an event that happens that actually causes gold, instead of doing this, it causes gold to push into this price point. And then we see sellers jump in. So that's what you have to keep in mind, is that it's your responsibility to keep up to date with everything that's going on in the markets. Keep and notice how it impacts what you trade and whether things are being weighted towards one side or towards the bias. So that's what we have to keep in mind. We are getting closer to the new 4-hour open at 4-hour candle open at 9 a.m. So we'll see how price action develops and how this candle closes on gold on the more intraday time frame. So on the 15-minute, 30-minute.
You know what's cool? On gold, if you're looking at
There we go.
XAUUSD,
you see this? Now we're gonna start testing in that scenario. Let's see if it starts playing out. Sorry, Kevin. You were saying something? You're saying something?
Yeah, I was just saying, if you look at gold, if you look at GC, if you look at futures, ESNQ, GC, the 4-hour closes at 10 a.m.
10 a.m., right? Yeah.
Yeah, if you look at XAUUSD, because it's 24 hours, closed at 9.
9 a.m. Yeah. That's a good pointer. So even on GC, right, you can see like GC just straight, we created a new low in this. Let's focus on this trend, right? This is what we want to keep in mind. Let's focus on this over here, right? Ignore the channel. I'm just trying to illustrate to you, because we came off of new lows here and we can steadily make our way down. So when you're more aligned, now you have more you can take advantage of. You see the downside here. Now you start to think of, okay, are institutions looking to buy here or are they looking to sell? What does my opportunity look like on the sell side versus on the buy side? Because let's say if you're buying here, where are you buying until? Up here? Up until here? No, that doesn't look as appetizing to me. I don't want to partake in that. But if I'm aligned with the macro bias, in this case, you go to gold, you can check it out. Oh, gold is bearish, is slightly bearish in the day trading time frame. Okay. I can start to map out scenarios that might play out for sells, because I know that we've tapped into this resistance. We've pushed up overnight. Do you want to be looking for gold buys after we have already pushed up? How much was this since yesterday? We pushed up nearly $90. No, I don't want to be looking for gold buys after we pushed up about 90, about $100. I'd rather be aligning myself. Now I know, okay, my downside reward is so much higher. It's now you have a higher probability the market isn't going to pump too much higher from here before sellers jump back in. And that's what you have to think about, right? It's you have to think about in terms of how much more. It's the same thinking that people had or market participants had when equities was selling off in the middle of the Trump war, like tariff war. How much more can it sell off? And look at that. Gold is beautifully pushing down. Come on, guys. You come here, we give you free sauce. Like this was just free trade, free money on the line here. And where did they go? Where did that? See, what did I say? Now let's see how we react here, because this is now getting into another lower time frame area. Let's see if we exactly I was mentioning here is that we could even now you see we broke past these lows, right? We could even push up into here. Let's say we come up to this point, and then we could even push here, create a lower high, and then continue, because that would be valid too, because now we've just created this low from these broken past these ones here. So that's what I'm going to be watching out for, is how does this react over here, and we're going to manage this. I'm already in a position on that break, as I was mentioning, is that that's what I'm going to be looking for. So I got in on this candle over here, so I'm going to put my short position, and I'll show you how I manage this. And I have a bigger stop loss here because my target is towards the downside, right? So I'm still going to get my 1 to 3 regardless. I know that if gold pushes into here, I'm going to manage it. But if we continue to break below here, this is going to run free, and it's going to mimic this move where it's going to cancel out this, and we're going to head back down to the previous area where we saw buyers jump in, and we're going to test that before we see any further outflows. So that's just the trade idea that I have in mind, is that I think based off of the current macroeconomics is that we can continue to push down with the bias showing us that gold is slightly bearish. We know that this is our target level on market. So, but I also know, and I see with my own eyes, that there are areas before that where we could see some trouble. And this is one of those areas where I want to target. So I'll have my downside targets towards here, which still gives me a hefty 1 to 3 risk reward setup. Meaning if I risked $1,000 on this trade, I'm looking to make 3,000 or more in this case. Quick question. What does currency intervention mean to gold and other asset classes? Let's say if we get a yen currency intervention, does that mean we may see short-term outflows from gold? Not in this market environment. You may see, look at it. Oh, come on, guys. This is beautiful. All right, just this. I'm going to answer this question, but just for a quick clip. So we talked about this. The macro bias on gold remains bearish on the day trading time frame, and it has since April. So that's what we were looking for. We were looking for those sells after we had this massive push towards the upside overnight, and we mapped it out that if we got a break of this 52.22 and we continue downside on the lower time frame, we're going to target towards 44.75s, and we're getting clean breaks of this. So with this clean 1 to 3 risk reward setup, we now correctly positioned ourselves, and you can click the market integration on TradingView here. We've correctly positioned ourselves with the day trading bias. So now our probabilities of this trade succeeding are much higher versus if we were aligned on the opposite end. So
Bro, that's
now,
fire.
Yeah,
that's sick.
Yes, sir. Yes, sir. That's how we do it here. Now let's quickly jump back to ES before we get to that yen intervention question. Okay, so ES just still doing whatever it's doing, and I mapped out what I want. I want these 3 scenarios to either play out, and that's what would be nice stock market buys for me. Mainly this one and this one. So if we're mapping this out, this is your A plus setup. Okay, this is your A setup. And then this is your A minus setup. So they're all great, but this is your A plus. This is where you put the balls on the line, you risk 5%, and you make 15%. This is that setup, right? Okay, so look at gold. Gold, nicely new lows created, pushed back below this minor area we had. I'm gonna get rid of some of these drawings here.
A beautiful break. Gold's definitely looking like it's going to continue. Volume picked up with that trend as well. Nice entry, man.
Thank you, brother. Thank you. I appreciate it.
Yes, sir.
It just takes all it takes is understanding, and that understanding is never easier to get now, right?
Yep.
Like I just
Yep.
went, I walked you through a bias, a macro bias, showed you because of these points, these headlines coming in, this side is just becoming stacked with what could happen, right? So that's what we're focused on. And we also talked about from a market psychology point of view that hey, the market's just pushed up overnight. Am I really going to be looking for buys from here? Or am I going to look to target the target the intraday downside because we know gold remains bearish due to escalating factors. We see this on oil as well. We see those escalations take place exactly how we mentioned it yesterday. When we talked about it, market was here, and then those headlines came in and escalation followed. Oil, and now you can see oil is steady making its intraday shift over here. If this starts holding, guess what's going to happen to oil? Oil is going to get into this sort of correct, start pushing up now on the intraday time frame, just like how we did over here after those escalations start stacking up, right? This is the difference in being able to look at just market structure and understand where price is going, but also piece it together with the story that's being told on in behind the scenes. And that the market is it's a vast mechanism. It's a deep mechanism of all these events and everything going on in the world. And price is just a mere reflection of how traders across the world position themselves. So you have to keep that in mind, is that money is not being positioned based off of technicals. Money gets positioned based off of what goes on in the world. And if you're not paying attention to what goes on in the world, then moves like this don't make sense to you, or even moves like this where you had massive outflows on gold and such crazy opportunities wouldn't make sense to you.
Absolutely. Absolutely. We had a question earlier. I was saying, is it possible to implement GEX and combo levels in the platform? Now, we don't offer that's like options data. It's a bit of a different area, but what's great with the market and what's great with the fundamental aspect is you need this fundamental aspect to know, are you really trading with an edge? Because that's when you could come in and start saying, okay, I have my support zone, I have a pullback area, and we're overall bullish. And I also have, if you're using gamma, I have a gamma exposure level sitting right here too. And when you get that reaction, now you have your extra confirmation, right? I like to call it the and theory, where you could say, we have a gamma level and our fundamentals are bullish and we're showing support. When you could start listing ands for your trades, that's
Exactly.
when,
Man,
right?
that's just what we went through, right? That's a
Yep.
great. Oh, I love that, Kevin. That's fantastic. That's a great thing to keep in mind is when you can start listing those ands. It's and we just reached a resistance and we pushed overnight 1,000 pips. Are we going to get buys? No, we're most likely to get the other side and we're aligned with the buy. Man,
Yep.
you're so wise. You are very wise.
Bro, that's what we bring here to market, man.
That's how we do it. So we're gonna let this position play out. I'm just gonna move it to the side a bit. But to get back to that, could you pull up that yen question?
Yeah.
Quick question: what does currency intervention mean to gold and other asset classes? Let's say if we see yen currency intervention, does this mean we see short-term inflows in gold? No, this used to be the case, and this used to be the case when the focus was purely on monetary policy, and this was mainly the case in 2023 and 2024, mainly in the first half of 2024. So, and that was the case because the yen has, if you know anything about the yen, you know the Bank of Japan has been dealing with what Japan has gone through for decades has been deflation, right? And you can see they've been trying to stimulate the the Japan's economy for decades, and that stimulation has caused them to completely devalue the yen over the course of the past few decades. You can see such crazy devaluation of the yen, and yen continues to hit new all-time lows. So what ends up happening is that the Ministry of Finance, Japan's Ministry of Finance, ends up intervening at certain times, and it takes a few criterias, as Kevin was mentioning, the ands for that to happen. They're not just going to intervene when yen is in a free fall, right? There has to be a few other things that have to align. Another one has to be dollar absolutely ripping into highs. Dollar ripping, mass volume going into dollar is going to further cause the yen to devalue. Yen's already going to devalue, right? Yen is going to cause yen to further devalue. So when you see dollar pumping, and at times previously you would see the Ministry of Finance intervene and buy a ton of yen to prop it up short term when dollar was pumping after CPI reports or things of that nature. In the time horizon where if CPI came out higher, dollar would absolutely rip because markets would price in higher rates for longer. And in that environment, we are way more focused on rates. We're way more focused on global monetary policy. And that's when you would see instances of every few days, a Ministry of Finance or every few weeks would jump in, and you'd see these headlines come in at like 2 a.m. or they would come in randomly at like 8:35, 5 minutes after CPI or 5 minutes after NFP. So, and then you'd see that impact on gold, right? But that doesn't happen anymore because the focus changes. The broader focus right now, and you can see, is more on geopolitics, specifically since Trump's policy and Trump's administration has come back into play. And it's the same playbook as it was years ago, right? It's the exact same playbook, regardless of what you trade. When Trump was in president in 2016 onwards, right? Gold has moving the same. This is where Trump came into this is Trump markets, right? This is where Trump came into presidency. Where was it? November, right? November 2016, right here. Okay. That was the gold bottom. That was the gold bottom. The instability that Donald Trump's presidency brought on a global stage is all shown right over here. This is the first trade war that he went on with China. That's what this illustrates to you, is that this is that trade war. Now, keep in mind, it's that exact same play, and look what the same impact on gold. So this is where the macroeconomics comes in, is that if you're not paying attention to it, is that you're not going to understand why we had such parabolic moves on gold all of last year. Why did that happen? It's not going to make sense to you why this massive correction happened and what led to this, right? So all these things play into understanding global financial markets. So I want to come back to gold here, and we're going to see how we retest this area, because keep in mind, we could do, where did that go? Where is this? My God, so many drawings, right? Oh, I think I deleted it. I deleted one of them.
Just so you know, if you're deleting a bunch of drawings, you click the top drawing, hold shift and click the bottom drawing, it'll select them all for you.
Oh yeah, there we go. I brought it back. Control Z'd my way back. Yeah. So this is something I'm keep watching out for. I'm still in this position, right? As I mentioned, that if I'm going to take a stop loss, I much rather take it into these highs, because I can see these scenarios playing out. Is that gold could just push in the lower time frame. We created this sort of low over here after kind of being at resistance. And there's another question I want to get to, is the levels question. How do you determine the levels? Somebody just set that up, right? So we'll get to it. So we could retest this, still create that lower high and head towards the downside. But we're going to see. So we have Fed Hammock talking about eyes broad, inflation metric looks at wide range, sees job market as stable despite meager job growth. Warsh approaching jobs with open mind, asking questions. So nothing much. Warsh is approaching job. Yeah, it's just like nothing much. Resilient firms remain resilient despite significant change.
Markets aren't really taking anything the Fed says right now to heart like it was last year.
Who focused on exactly, and we saw that die down as soon as the war was picking up, where that ends up dying down, and the markets end up focusing on the next thing in mind, which in this case is just focusing on the war side of it, right?
Yep.
So yeah, that's this is where we're currently at on ES, where we are about 25 minutes away from market open. And so again, these are the three scenarios I would love to see play out. Is we know that this is an active demand area on the intraday time frame. If we come down into here in New York Stock Exchange open, we push into here and then we push up. Perfect. That's easy. That's an easy trade, and we called it. It's a winner. Okay. On the opposite end, if we push a bit lower, there's this other lower time frame area I want to watch out for. I want to watch lower time frame reactions and see how we react into this 75.50s area, because we know things like this can also happen. It's where we push a bit lower, right? We push a bit lower over here, and then we snap back into that same price handle and continue towards the upside. So things like that could also happen, is that we push a little bit lower, could be this price point, could be a bit higher, and then we snap back above. And then if you don't take that entry, let's say you don't get that, then you can get something like this, where once you snap back above, so I'll map all these out. Oh, this will be a nice way to approach this. So, well, you get this. If you don't get the one lower, you can focus on this entry. And now what we're doing is that we're still aligned with the overall macro trend, but we're also mapping out the highest probability setups that work for us, right? That work with as we're aligned with the trend. So you can see this has the highest risk reward. This has a high risk reward as well, higher than the one over here and higher than the one over here. So now you've mapped out these potential scenarios that could take place and how you would react and how you would take advantage of every single one of these ones, right? So now imagine market opens. Oh, we got a ton more headlines. Nothing. Trump, director of federal housing. Yeah, it doesn't. No, nothing much.
This is a good pullback area to re-enter gold shorts, guys, if you did not get that entry before, right? You want to enter on the pullback. You don't want to enter into strength on the breakdown.
Yeah, exactly. Especially you don't want to be selling at this low. That's exactly what we talked about, right? People see this as a break and they're like, okay, let me sell on this low. But it's you're buying, you're selling into a point where you would see algorithms buying, because algorithms are buying from low. Algorithms don't see candles. They just see price. They're very objective. Is this a lower price than it was 7 ticks ago? Yeah, it is, so it's you have to look at it in terms of thinking in terms of that. So back to ES. Yeah, great point, Kevin. And we got that clean reaction as we talked about right over here. As I talked about that, it's going to be a focal point. So we'll see if we break below this low, then you're going to see this position continue to play out and manifest into some money.
Awesome, man. Somebody had a question. I love this question. So David asks, what about on gold, the 4-hour, there's a 4-hour fair value gap and a 1-hour fair value gap. And I love this question because a lot of people will have that same question, right? Well, oh, we have a support zone right under us, whether it's a fair value gap or a supply and demand zone. But we have to remember context is key.
Context is key. Yeah, and absolutely. Like, main thing we need to keep in mind is that you can always integrate macroeconomics fundamentals into the way you trade. And this is all a game of probabilities, okay? This is completely a game of probabilities, and either probability could play out. And if it plays out on your side, you're going to think of it as the 1-hour, 4-hour fair value gap. If it plays on somebody else's side, they're going to think about it as I took shorts from the resistance and I rolled that down. So we all have our own perspective of approaching the technical aspect of financial markets. But what we need to keep in mind is that behind the scenes, what drives the money, that is a very objective viewpoint. That you can't have a subjective. Yes, you can have a subjective take on, but if the market is moving in a certain way over a course of a time, backed off of macroeconomics and fundamentals, it's because we are aligned on that side, and that's how the money is flowing. So in this case, now think about this, okay? You see something like this take place, Kevin. Oh, that symbol doesn't exist. That's weird. TradingView just glitched out.
Market would never.
Yeah, what is this glitch? TradingView? Okay, maybe I should leave this. Okay, so let's. I'm gonna paint an example here. Now let's see this. Okay, you see gold bottoms out here. You see a double bottom. Any technical trader is going to see this as, hey, I'm going to look for, I'm buying this. This is gold is flipping bullish. We're going to head back into these highs because that's the trend we're in. But what you don't keep in mind is that the macro bias over here is completely different than it is here. Any escalation on the war front leads to gold bears. And then we see that played out over the course of the intraday sessions where you see price aligns again with the macro bias, and then you see new lows printed. Did those lows come from previous lower highs? Yes, they did, because that's the trend we currently are in. We're in a period where war escalations are happening, and all these escalations do is bring outflows on gold. But the short-term basis is that it's completely normal to see pullbacks in the intraday timeframes that lead price to a better sell area, right? Now, in this case, the thing that we had mapped out was that if I'm looking at gold and I see this massive play towards the upside, right? If I see this massive play towards the upside happen last night, I have an idea of what we're pushing into. I know that there's sellers waiting up here. Okay. There's sellers at this price area because that's like the resistance we had previous week. We saw market gap up because of the changeover in futures, right? On futures, if you change over the contract, this gap doesn't exist. So we saw this gap on CFDs, but markets found the resistance last Monday, created a new low. So we're just coming back from these. We're just retesting this area back from these lows, right? We created this lower high in the higher time frame, created a new lower low, and it's the same process. It's that I don't give a shit if gold pushes into here. My bias doesn't change until we break past this technical area. Plus, I see a change of the day trading bias here, because then that tells me that something is switching in the macro time frame. And if that's the case, then I'm going to switch and look for buys and start positioning myself alongside the bullish trend. But until then, I don't have any reason to be looking for gold buys here. Yes, you can take that if that works for you, but I want to be aligned, because if Trump comes out and escalates, or if Iran comes out and escalates, I want to be making sure on gold I take advantage of those sells, right? On the other hand, if Iran comes out, escalates, because we know US equities are so delusionally optimistic right now, that just paves the way for us to use that as an opportunity to buy US equities. And in this case, exactly how we executed those buys yesterday live on stream is after we got those headlines coming in. We took the buys here. And in the opposite case, we took the sells on gold yesterday when we were breaking that down from the break of this structure all the way down to 44.50s, which was another clean trade that we called out. So we had Iran Fars news agency citing message exchange between Iran and US to reach has stopped a few days ago. Trump administration proposes 25% tariffs. Okay, that's just a Brazil headline.
He can't do the tariffs. He's keep doing that, man. Congress is like,
but he let it go. You know what I mean? Like, let it go. Let the tariffs go. So
yeah, right. Get over it, man.
yeah. Get over it. So this is where I want to be aligned with that macro bias. And I was saying that little by little, if we found the resistance here and sellers jump back into sells after an overnight pullback, is that now I'm much more aligned with the probabilities, because I know the macro bias is bearish on gold. There's things that are actively adding to it, right? Ceasefire, progress, cut safe haven, like, so all these things that are actively adding to it, right? Like oil shock fears can revive dollar demand, right? All of these things, trade de-escalate. So all of these can push gold down. Any type of new escalation, like the one we had yesterday, where we broke below that range, and then we called out shorts from right here, and that played out for 400 pips. That was the after effect of those escalations. And then gold came here, reacted this level, pushed into these highs. So now we're observing and watching and seeing how this can play out, whether we're going to lead into this area and price reaches down here. Because we are more bearish since start of April, people get a bit too short-sighted, and people end up looking at price action like it's just 2 days old. And they don't realize that we're still in the same macro environment and geopolitical sentiment as we have been in since start of April. Nothing has changed. There's been no progress on the war. There's more troops stationed in the Middle East now than ever before, than start of April, sorry. Right. So what's really changed? Is there free flowing straight? No, it's restricted. Like we saw yesterday, Iran's like, we're restricting it. US has their blockades up. So what's really going on? Nothing has changed. And they have to go back and forth, right? It's the same thing with oil we talked about, is that they're not going to start escalations when oil's at $100 a barrel. They're only going to escalate tensions when oil is sitting at 80s, at 90s, because then you don't have a risk of global stress, economic stress from oil being at $120 a barrel. That's why all these de-escalations take place at these highs, right? De-escalations aren't happening at lows. Escalations are happening at lows. Escalations happened here. Escalation happened yesterday right here. Escalations happened right here. They happened here. They happened here. De-escalations happen at these highs where you see Trump or Iran or Israel coming out, de-escalating the situation, and then price follows for the next few intraday period. And then at the bottom, we see escalations, and then price changes structure, and then we continue towards the upside back into the hundreds price handle. That's what macroeconomics is. That's how you translate this into market psychology. Understand that, hey, if I'm positioned, if I'm understanding what's happening in the markets, and I know we just had recent escalations, and that ceasefire thing is all bullshit, nothing's playing out, the strait is blocked more than ever, then I'm going to position myself on the right side, right? I don't want to be looking for shorts after we had some fresh escalations yesterday. I want to be like, okay, is oil changing structure right now in the intraday time frame? We're going from creating these lower highs, right, on the intraday period, gapping down, creating these lower lows, lower highs, reaching 80s, getting super fresh escalations right here. You see structure now start to shift a bit. And on the intraday period, you're like, oh, okay, maybe we're now shifting into more of a bullish structure, right? Maybe this massive demand zone that Nalab and Kevin have been talking about for months is continuing to hold. And now based on these escalations, we can potentially continue towards the upside. That's the mind frame you need to be in. You need to be thinking multidimensionally and not be so short-sighted on just overnight price action, right? Yes, overnight price action, we could push up. And this is what I mean. This is a game of probabilities. Maybe my sell position here plays out up until here, and then buyers jump in and gold test this area again before pushing lower. Maybe that's the case, okay? And then that's on me to manage that better. But what if this just now we continue as we were talking about, since we know that this is the previous low that was just made, we just tested this intraday resistance price point over here. What if now over time we just start making our way back down into this area, right? Like some sort of fashion like this, and then this creates, and we break this, we create a new low, and then over time, gold just comes right back down to these lows. This would be in the case of if the war continues at the pace it's going, if there's continuous ongoing escalations and no resolution, no written resolution, no physical resolution, because keep in mind, those troops are still there. That blockade is still happening. There's nothing. They're not going to give this up that easy. And you're naive thinking the war is just going to end. Has it ever ended in 3 months? What war has started and ended in 3 months? That's what they said about Russia, Ukraine. Look at Russia, Ukraine right now. All we care about is how long the markets focus on it. And if the markets end up starting to focus on something else and all of this starts fading out, then guess what? We're going to know and we're going to understand, because we're always understanding the macro aspect of it. You use a platform like Market, you understand the targets that exist, where we can pull back to, where further sellers can jump in. And then you pair that with with headlines, with trying to see how you can trade the upcoming data reports with JOLTS job opening and how that impacts gold. So all of this all together paints a beautiful picture, and that's what technicals ends up being. Is that technicals are just a mere reflection of what is happening on a global stage, on a macroeconomic stage, right?
Yeah. Absolutely. You mind if I take stage for a minute, cover some ES and NQ?
Please, man. I feel like I've been just yapping for an hour straight.
Bro, you're good, man. We're chilling. We're killing it. Great news, great knowledge, good understanding of everything. That is amazing. Let me share my screen for a quick moment. I just want to cover a question somebody had in the comments. Said, hey, Kevin, what happened with ES yesterday? 2 fair value gaps in a support area crashed through around 3 to 4 p.m. Sorry, just got in. Yeah, no problem. So I think I see what you're talking about, right? We have a fair value gap up here, something to be careful with, right? This is sort of where context is key. Yes, you were trading on the right side of the trend to try to go long, but you also have to recognize, right? When in doubt, zoom out, and when in doubt, look left. You were buying the highs. These are recent highs that we had. So a lot of times, unless we get an even stronger break, this is not a strong break. We broke it and we chopped around right above it. So we would not want to try to trade this as support down here. So really what we would see as support is that area we had originally from the morning. We broke that high, that internal structure shift like Nalab mentioned. That was our confirmation and try to buy that dip and take it back to that high up here. So unfortunately, right over here, markets have played out. We already broke that recent high. Fair value gap has very little to hold, especially because we were at those recent levels of resistance before. So just something to keep an eye on. What's great too, though, what I would use, right, if you are using fair value gaps as sort of your form of entry or confirmation, you want to use it when we're rejecting off of a lower high. So let's say we came off of this low, we created a fair value gap right over here. Well, then the context of that fair value gap holds a lot more strength than something that was right at a high that we broke out of. So it is important. Context is key. Knowing the strategy you use is key. And really recognizing where price is at that moment is extremely helpful too. Nice move on gold to the downside still. We're continuing there. Great
Sure. If you're
re-entry.
scalping, I would take some profit here. This is 100 pips, $10 move on gold. Amazing. If you trade CFDs and you use a one lot, that's $1,000 right there in a few minutes. Since our call out of that trade from 8:50 a.m. So now it's 9:23. In 30 minutes, you would have made $1,000. So good job if you took that.
Nice.
I'm managing my position where I'm still holding towards the downside, and my entry is sitting at on CFD gold on XAU USD 4522.36. So that's where my entry is on the break of this. We got a retest of it where we called out the entry again, and then now we're continuing towards the downside as we were mentioning exactly in this sort of structure that we called out, is that we would end up doing something like this and then continue towards the downside, where that's where we're looking to target. And that's my target towards the downside because it's aligned with the higher time frame. It's aligned with the day trading macro bias.
Beautiful. Great. Awesome, guys. Great breakdowns. Quick trade setups on ES. Like Nalab mentioned before, we're looking for that 75.80 area. This is where we held yesterday. This is where we held overnight. Can we possibly sweep those pre-market lows off 75.76 would be great. And then find some support afterwards. That would be awesome. Instead of buying the very bottom as soon as we get there, what can we do? We can wait for markets to create that structure shift on the lower time frame. Say we sweep that recent lower high, we come back, we create a higher low, then you would look to take your trade on the pullback with your stop at that recent low, and that would be your trade setup right there. So that would be for ES, and of course, we're just following the trend at that point. NASDAQ, on the other hand, I'm actually curious to see how we want to react to the upside at 30,600. The reason I would be okay with a short-term short position and would probably really just trade it towards VWAP over here is because we have recognized and we notice what have we been doing at this price level. We have been selling off from there. Again, from an intraday scale, on a lower time frame scale, sure, we're getting that reaction. So that is definitely what I'll be looking for on NASDAQ. A quick reaction here, even if it just takes us, like I said, to VWAP or this recent low we were just at, probably lines up right on top of each other. Yeah, look at that. VWAP is right there, and that low is right there. If we don't get this push higher first and we push lower first, then I would much rather take a long position off of a reaction to this zone and trade it back higher. And again, this long position, we're now trading with the trend. Just turn off these bands. We're trading with the trend. We're trading with our fundamentals. And we're also trading this range. We see that NASDAQ just gave us this range on the pre-market right over here. Well, markets range 80% of the time, and it's a lot easier for a market to go up and down than it is to break out and continue. So if we could take advantage of that, buy those lows and get out at the highs, that would be my ideal setup on NASDAQ off the open right here.
Yeah.
Awesome, man. Good stuff. Good stuff. Yeah, FEG is just a retest for me. Yeah, always depends on your strategy, your system, but always be consistent with how you're taking your trades, how you're executing, and what you're looking at. You do not want to be strategy hopping. Take advantage of using market, but have your core strategy have that follow through.
Yeah, exactly. That's the core principle, is that you combine it. It's not one or the other. It's your technicals work in relation to the fundamentals. It's a symbiotic relationship.
Yep, absolutely. Absolutely. Technicals are just a reaction of those fundamentals.
Exactly.
Awesome, man. This looks good, man. Hopefully markets give us some good price action today. Yesterday was beautiful. Hopefully
Yeah,
today.
yesterday, amazing start to the week.
Yeah.
Bank some of your profits. If you're up for the week, take some, pay some bills.
There you go.
And then just follow along. We got a whole week ahead of us. Powerful
Yep.
week, and even right now, we just got headlines from Fed Hammock, even saying, "Hey, the unemployment rate is still the single best job barometer." I was just saying that 30 minutes ago. I was telling you guys, I'm like, "Hey,
We're
that's still the
watching it.
focus, despite us having JOLTS job openings here. That our focus is still on the later half of this week with unemployment rate, with NFP, average hourly earnings. All of this is the main focus for the week right now.
Yep.
So until then, we're going to continue playing with our macro bias on gold, right? Gold is still in the day trading bias right here. We can see these are the recent things that have caused it to go down. Now, we also know that any sort of escalation is just further going to cause outflows on gold and inflows into crude oil, and which is going to again further validate whether we're shifting into that bullish structure now, where the market shifts into from these lower demand areas when we see escalations. And how that looks like on ES is then it just gets used as a buying opportunity in the US equity market, because that just remains very, very bullish and delusionally optimistic. And markets just been on the front run of this, of talking about the delusional optimism from all the way from as the deal was just that 2 week ceasefire was just about to happen. So again, gold playing out beautifully, as we mentioned, and we talked about. We get retest of here. Look at this. This is legit how price is following right now. As I drew it out before taking the trade, and I took it, entered, still in this position, still holding. Again, my target is towards the downside. Of course, I will manage accordingly as we react to these lower time frame areas. But this is where I'm really looking to see price head back down and kind of cancel out this retracement move that we had. But of course, anything can happen in the market. There could be a de-escalation headline that comes in that pushes gold up into a better sell price, and you see buyers jump in. So we just always have to adapt, and it's all a game of probabilities, right? So you can see we mapped out the probabilities. We aligned ourselves with the macro bias over here, and we knew that we're going to look for shorts if we get a break of this, or if we push into this resistance, because this is where gold is right now. In a sentiment largely driven by the war that's going on, gold has been bearish. And now it makes me more confident and higher conviction in being able to take a short trade that is actually aligned with the higher time frame and with the intraday trend, but it's not aligned with what if you were just a technical trader and just looking at this move over here. You're going to think I'm taking a counter trend trade, but I'm taking an intraday setup that is aligned with what's actually happening on the macro and geopolitical front. And that is much different than just looking at this price action and thinking that gold is going to continue going up from here after rejecting this low, right? We're aligned on two different things. I'm aligned with what's actually happening in the world and how money is moving in the system. And if you're just if you're very short-sighted, you're just purely aligned and chasing what the technicals are showing you.
Yep, absolutely. Guys, New York
Again, look at this. Guys, that's a solid play on gold. Even if you're a scalper, right? Scalper or whatever, that is still 140 pips on gold. Come on, that's your 1 to 2, 1 to 3, and let this go now. Like,
going to keep going.
move it to break even. Move your position to break even, and then let it roll out. That's 3 solid trades called out. in 24 hours that we had.
That's
We had,
crazy, bro.
we called out these shorts after the headlines came out.
Yep.
These shorts right here. We called out the ES buys from here into new all-time highs, and that played out perfectly. You called out the oil buys from 91 to 94,
Yep.
and now we called out these
NASDAQ longs too
yeah,
yesterday.
NASDAQ longs and these gold shorts that are currently in play. So we have called out 5 trades, all successful trades over the past 24 hours. That's what I mean. The markets, the opportunities in the markets are infinite. But if you just pay attention to what's going on, what could change the bias, what can cause temporary outflows for me to take advantage of and get into longs on ES, that can all be used, and you can operate with a much higher conviction in the market.
Yep. Absolutely. Great plays, great trade setups. And of course, guys, make sure you trade accordingly, right? If you see that gold is in a wild big range and you need a 4-point stop loss and your risk is $200 and it's got a 4-point stop loss, you're not risking one GC contract, right? That would be way too big of a risk. Go down to those micros.
Yeah, go down to those micros. No one's telling you that you have to put everything on the line, right?
Yep.
You're gonna build bigger wealth and just with like trading in the markets if you just focus on the long term part of it. If you just focus on your next 5 trades, like you're not going to build that wealth. It's I had to really shift my focus on thinking about my next 5 trades to my next 1,000 trades. What does my next 1,000 trades look like? If I only had 1,000 trades, how would they play out? Would I waste 999 of them on just taking the most bullshit setups, or would I align myself with the global macroeconomics and geopolitics and be on the higher probability side? So sometimes, what symbols you on for gold? My screen's too small. We're on XAU USD here. We also map out GC, and if you're on market, that's the same as XAU USD or GC USD as well, right? So you have to keep that in mind. Quickly switch.
Something to note, and I'm glad somebody asked this before about the whole, oh, what about the 4-hour fair value gap, the 1-hour fair value gap that we're literally just chopping through right now is, yeah, that was a support zone, but that doesn't mean it's going to hold. But because it's a support zone, because whatever reason it is support, in the case of a fair value gap or a low volume shelf, it's a volume imbalance, right? So markets usually will give us that reaction, and that's what gives us the either reversal or continuation off of those fair value gaps. But when context is going against that zone, then we get this type of price action where it's just it chops down into it, it tries to pop out. People try to go along thinking this is the reversal, and then it continues lower. Then it gives us another pushback higher. People try again on longs just for them to yet again get stopped out for us to continue in the path of the shorts.
Yeah,
so staying bearish, very fantastic re-entry on that. And yeah, great call, guys.
Amazing. Drop some W's in the chat, guys.
Hell yeah. W's. Awesome, guys. Great stuff. Let's see NASDAQ and ES at the moment. NASDAQ did just push into that VWAP area, looking like it's trying to hold. I'm not taking any trades here off the open. It's only been 5 minutes into the New York session. There are 6.5 hours in the New York session. Do not force trades in the first 5 minutes. Let's see. Great. We see ES trying to move higher. I'm a big fan myself of looking at the VIX. VIX is also at a key area, the $16.30 range. Look at this. We've rejected this area on the VIX multiple times now to the downside. If VIX is moving lower, ES is moving higher, right? Because of that divergence that they run together. So keep an eye on VIX to now try to move lower with ES moving higher. And NASDAQ is still failing, though. Not taking longs right off the open. The trade plan was to see a reaction to this VWAP. So wait for the reaction. If we're selling off through it, we're not jumping in on every little wick we see. We're waiting for the reaction. Extremely important. Gold's just chopping its way lower. Beautiful there. Beautiful. And what's something else to note too, guys, if you are struggling with entries, you're struggling with getting in too soon or out too late, remember that some traders trade on a 15-minute time frame, right? They got to wait 15 whole minutes for each candle to open and close before executing a trade. So don't be so locked in on a 1-minute time frame, a 5-minute time frame. Go to those time frames when we're at your level. When we're not at your predetermined level, stay on that higher time frame and you're going to have some better insight into, okay, this is a no trade zone, or okay, we are getting the reaction. But right now, no trade zone in my opinion. We're off VWAP. This is support on NASDAQ. Weighted ES is trying to move higher. You can see where my equity chart is. See if I can find that somewhere. There it is. Playing hide and seek. All right, Meta is below its previous day's range. Meta just broke below previous day's range. Microsoft is below previous day's range. Apple is close to previous day's high. Nvidia gapped up higher last night above its previous day's range. Google is weak and Amazon is weak. Again, we would need these equities to start to show some strength to give me that confidence on NASDAQ. Gold's still struggling. We love to see that. Take a stab at the dollar too. Make sure dollar is also showing us some bullish strength. Let's see. Take a look at the dollar here. We'll start on the daily time frame. Same situation. Dollar is an extremely range-bound asset, so it's not going to be something that it's like, oh, look, we're in a beautiful trend on the dollar. Very rarely does this happen. So while we're between 100 and 97, expect that range. And now look on an even smaller scale. In the past, this is since May 15th. This is over 2-3 weeks now. We have been between 99.43 and 98.92. And if we take a look at gold, it's most likely giving us the same range. Look at that, guys. Range bound on the dollar, range bound on gold. Really be able to recognize the highs and lows of these ranges and the fundamentals behind it to give yourself that crucial edge. Awesome, bro. Those shorts on gold, man. Still going. Still going, baby. Yes, sir. The lab's barking up a storm over here. He loves that trade. Awesome, guys. Guys, let us know, what tickers do you guys trade? What symbols do you trade? What strategies do you incorporate? It is 9:38 right now. We do have JOLTS at 10 a.m. Eastern. Again, it gives us some insight. It's a monthly report, so it has some more strength and weight than something like initial jobless claims, which is every Thursday. JOLTS is once a month, but it's not as strong as something like CPI, non-farm payroll. Just like Nalab mentioned earlier, I love that he pointed this out. JOLTS is job openings. Companies could leave openings months after they've been filled, right? So it's not the most accurate reading of a report to say, oh, wow, JOLTS is so high, people are hiring, that's great. Half of it could be bluff, right? We don't know exactly with this report. So great call on that. Great analysis and breakdown of that report, Nil.
Thank you, man. Yeah, we're just waiting on this data report. We have 20 minutes and just seeing how ES and US equity markets have opened up. We've just seen a slight push. I still think we're going to get a tap of the levels we want, whether it comes today, later in the session, whether it comes tomorrow. I love pullback buys, being able to buy or sell on a pullback. And that's why this gold sell is an intraday sell focused on this pullback that happened, this intraday pullback that took place. Do I care if we go back up to retest this and then we see sells? I'll manage my position accordingly, and I'll position myself again if I need to, if that bias holds up, right, on gold. Do you mind if I take over?
Yeah, go for it.
So again, this is more of a pullback trade based off of this intraday pullback that we had aligned ourselves with the intraday bias, which is bearish. And now on the ES side, I still think we're going to get this. We're going to reach one of our levels over here. So whether it's this one, or this one, we're going to reach these levels, and then we're going to see how market reacts to it, whether buyers want to accept this price. And then we see buyers jump in and we continue to these highs. Clean, easy trade. If that doesn't happen and we see markets push below, again, we'll just be watching to see where we can get that buyers really catching a bid over here on ES. And then you can either enter here or on this snapback above this level and into these highs, or on this main big level area that we drew out here. This was our main meat and potatoes level for buying. So we'll keep our eye on that. On the side of gold, if we go back to the lower time frame movement, we're in gold sells since here and this retest call out that we called out. So those sells are still running. If you are a scalper or someone who's likes to stay in the markets for a short period of time, I would look to take profits on gold. Otherwise, move your stop loss to break even now. And now this becomes a risk-free trade that we took, right? Now this is a risk-free trade as we approach these lows, or if you hadn't taken profit, because we called out, make sure you take your profits. This is a pretty, there's 150 points, right? 150 pips. So if you didn't take your profit and we approach these lows, then you can start to exit and let the rest of it run. And maybe it extends down to here or further lower to our intraday target, right? Or worst case, if we push back into here, you'll just take a break even. And that's fine, because now this has become risk-free, right? This has become risk-free. If we head back up into this area, maybe market wants to go back to retest this price handle before we see further sellers jump in. So all of this is just a game of probabilities, but it's making sure you have every scenario mapped out so you understand how you can adapt and attack on each possible scenario. Because now let's say I'm in this trade and I'm at break even, and now I see candles start switching up on me and start pushing higher. Worst thing I'm going to do is get out, take a loss of just commission, few dollars, boom, right? Gone. That's okay. Now, at least I know that I adapted, and we can head up into here where I can start to observe and see if sellers want to take this price, right? And then I can position myself. And sometimes it takes more than 1-2 tries, as we talked about, right? So it's all about mapping out every scenario possible, but holding your conviction, aligning yourself with the actual macro bias, figuring out what's working for you, what is going to work for you on a long-term basis as well, as Kevin was mentioning, is that consistently doing that, not just switching up because you see one of your friends making money a certain way, is that having that conviction, is that there's people looking for buys here on gold, and gold is just continue to push down here. Like, think about the amount of people that were buying this one candle that pushed up. They're like, oh, we're buying from support here. This is support. And then guess what? That support gets taken. You get a lower high here, and then you get a new low created, right? Like, this was just, now you missed out on a massive move towards the downside like this. That could potentially extend further, given that it's aligned with the macro bias that we have here. If you click this mark, you go to bias, you can see it's aligned with it, right? So that's what it's about, guys. It's about the decisions you're making in the market. You only have a limited number of them, and you want to make them with all the data and clarity available to you. If there's anything missing, you're just wasting that decision.
That's awesome. That's great. And yeah, it was a conviction, confidence. Confidence is key too in trading. If you're not confident with your setup, as soon as you're in the trade, you're gonna be sweating. You're gonna be second guessing it. Oh, I'm in profit. Should I take profit here? Oh, I'm in a little bit of drawdown. Should I cut my trade too soon?
Right?
And then, so have confidence in your setup. You take a trade, you know where your stop loss is, you know how much you're risking, and you know where your take profit is. There is no in between. You already had it planned out. You executed. Now you wait.
Yes, sir. Look at this. Beautiful, beautiful. If you haven't taken profit yet, as you approach this low, make sure to take some profit. That's 150 pips called out live on Market in the Morning with your host, Kevin Dabrowski. And you can join us every single day here. It's usually me, Kevin, Jeev, Imri, and guests, and then Tony and Juan. They like to do it. They do it in the later afternoons on Mondays for a Spanish audience. But we're always calling out amazing positions. We're showing you how you can position yourself with the macro bias and the geopolitical impacts that are happening in the markets and keeping you up to date. All of this, everything that goes on, like look at this: UAE pipeline to circumvent Strait of Hormuz for fuel export. Middle Eastern oil firms seek ways to cut Tehran's straight trade route control amid Iran war. Yeah, all of this is, sure, it's optimistic a bit, but at the same time, how much is this is true? We show you what's actually impacting the markets, and no other platform does it better than Market does, where you're given, oh, this is a high impact. Halts communications. You're like, what? Then you're like, says negotiating team is stop messaging exchange with the US. No way, right? And you're like, I thought Trump was working this out. And then
Yeah,
you see,
right? I believe
right?
every headline. What?
Yeah, you got it. And then you see a move like this take place, and you're like, wow, I can take advantage of this. This is the initial headline that came out. Gold broke below. We called out the shorts, rode those shorts down here. ES, we called out, hey guys, there might be tensions upcoming when ES was here. Tensions happened 10 minutes after. We called out the buys from here. This is how we position ourselves, guys. This isn't just magic. It isn't just woo. It's actual macroeconomics. It's geopolitics at work. It's real money being moved across the markets based off of what's going on. We're not here. I'm not here pretending that I coded the algorithm. I'm here breaking down real world events and giving you guys trade ideas. That's what we're doing here.
Market didn't code the algorithm. Market's decoding the algorithm for
Decoding.
you.
Yeah, there you go. Yeah, it's decoding all of it. It's doing all the heavy lifting so you don't have to do it, right? Like you'll know exactly if you trade ES, wow, I know exactly what scenario could flip it bearish, And that's or what escalating Israel-Lebanon conflict raises global risk off. And then remember, yesterday we had that headline where Iran's like, hey, we're gonna block the strait again because of your attacks in Lebanon. So that's how you know that outflow then takes place. That's where flip watch comes in. That's what could flip the bias short term comes in, and then you align yourself with the higher time frame and day trading bias. In this case, bullish. That's why we took these buys once we saw buyers starting to enter and sellers exiting the market with this change of lower time frame structure. You see what I'm saying? You see the painting out here? It is so beautiful, and it becomes easier and clearer to act on and execute on when you actually understand what's driving the market you trade and you have all these scenarios mapped out. Like look at this on gold. We had mapped out that scenario, and then we had also mapped out other scenarios. And guess what ended up playing out? What was this exact scenario that we mapped out before we even entered while gold was up here? We talked about, hey, if we get a break of this, we're gonna probably tap into the zone, retest 45.25s, come back down, break it, retest this, and slowly but surely make our way and then cancel out and correct this entire upside retracement.
Yep.
This is where the probabilities get aligned on our side, because not only are we aligned on the macro side of it, we understand the technical aspect of it, right? And now what we can do is have a high conviction trade that even if we pull back into this area, we still held through it because we understood, hey, this is a fresh trade. We have conviction in this setup. This is a likely probability of this playing out. So I'm going to stay in it. I'm going to manage it.
Yep. Absolutely. Absolutely. There we go. All about managing your trades too when you're in it. Not about getting out too early, but managing your trades, moving stops to break even when TP1 is hit, things of that nature. Hedging, right? Not hedging, but taking profits, right? Taking some off the table to lock in those gains.
Mm-hmm.
NASDAQ ended up rallying right off of that VWAP that we mentioned earlier. Take a look at this. Remember, we were waiting for the reaction. Well, this 5-minute candle right here was our reaction, so we could have taken it on the next 5, and we are looking for that continuation. I am not in this trade myself right here. If I was looking for an entry, I'd hope to see this close up here, which it has 20 seconds, so it will, and then a pullback towards that area to go long for a higher low and target those higher highs. Again, just trading the trend, right? There's nothing, we're not trying to catch and short the highs. We're not trying to catch the perfect reversal. We're just trading with the trend because the trend is our friend.
Yeah, exactly. We're trading with the friend. Trading with the friend. We're trading with friends, and we're trading with the macro trend.
There we go. That's it. Bitcoin waiting for 68K to get a pullback into 7180. Damn, bro. Bitcoin is just, Michael Saylor came on. Didn't he say he was selling Bitcoin for the first time since 2023? That's always a good sign, right? I'd love to see Bitcoin crack below 60K, a key psychological point where a lot of people are going to go, oh my God, it's below 60. It hasn't been below 60 since 2024. I can't believe this. I got to sell it. I got to get out. Everybody who's been buying since 2024, they're completely in the red right now. I mean, they're down 40% if you bought anywhere near those highs. back in October 2025. So again, we went over this yesterday, right? Where there's pain in the market, there's gain in the market. If we could feel that massive pain below 60, and another way to look at it too, if we do get below 60, guess what? All Bitcoin has to do is make its way back to those all-time highs that price was already at. So it makes it that much easier for price to return there. And you get 116% ROI on that trade.
Yeah.
And that would be, of course, a long-term investment, a buy and hold. And that goes without say, if Bitcoin ends up heading towards 150, right? That's even bigger of a profit, 154%. This could possibly be, if it does break below 60 and starts a hold, the last point that Bitcoin finds support before it does rip higher and continue higher, just like the chart has shown before. We've seen crazy 75% rips to the downside. Well, this would be a 53% rip to the downside and then make its way back up.
Yeah. Yeah. Brilliant.
Let's see, NASDAQ.
Even if you like a higher reward opportunity is actually on MicroStrategy strategies stock.
Yes.
So if you just overlay it with Bitcoin, actually, let's do that. If you go back to BTC,
yeah,
and just how to overlay, like that, press the plus button. The plus button next to that.
Right.
Yeah. And then do MSTR. And now you can see that MSTR, because strategy has become one of the largest corporate holders of Bitcoin, is that its movement is fully aligned with how Bitcoin moves, right? So the larger risk, the reward here is actually, if you want to align yourself with not only BTC but strategy. Strategy has like a 400% upside right now.
Yeah,
and
that's
the same upside that BTC has is strategy is going to follow it. Maybe not. So if you want to just open up strategy now and do just the base stock here, and you'll have to you'll have to remove that one. So
remove strategy from strategy.
Yeah, now look at this movement towards the upside. How much percentage is that towards the previous highs?
Look at that, 285.
Yeah, 285, right? 285. So massive potential on this as well. If BTC starts chugging away, guess what's going to happen to one of the largest corporate holders of Bitcoin in the world? The stock is also going to chug up.
Oh, that's a tough surprise. My God, that's a tough surprise right there.
Yeah.
Oh, 4,000% miss on earnings on
the revenue is Bitcoin gains, right?
Yeah, seriously. Oh my God.
This is like one of those stocks though that when Bitcoin does chug, this will chug alongside, and it doesn't. This number to me doesn't mean much right now. This is it's become correlated, and it doesn't happen often, right? Where something becomes two different asset classes become correlated, and this is like one stock in a single asset class became correlated with the cryptocurrency just because they accumulated so much holdings.
Yep.
Right? They switched the entire strategy to just be a corporate holder of Bitcoin.
Yep.
And now they have what is it? I think it's
a lot.
Remember, it's like $60 billion worth of Bitcoin.
Let's see. Yeah, probably something crazy. I know they just sold, but they definitely didn't sell a lot. I wonder if
they definitely didn't sell a lot. They probably sold maybe for liquidity purposes, but they're still one of the largest, if not largest, corporate holder of Bitcoin.
Yep. Let's see. Do they show their Bitcoin?
Now, the thing about this, who's one of the largest holders of gold? It's the U.S. U.S. has over 8,000 tons of gold.
Bang, yo, TP1 getting hit on gold right now.
Let's go, guys. That's what I'm talking about. This is the financial market. This is how we make money. This is how we wake up on a Tuesday morning, make $3,000 in a few hours, and we call it a day, and we move on to the rest of our lives, right? And we also have 5 minutes until JOLTS job openings.
Good call. Exit those positions.
Yeah.
Protect yourself.
Yeah, protect yourself. Secure some profits. Let some runners run, and just let it play out. Same thing on ES. We'll see how ES reacts to the JOLTS job openings. W's in the chat, guys. Everybody spam the like button. Share this with your friends. Get everybody on here. Our goal, guys, is to get 1,000 concurrent viewers across social media. Right now, we get about 200 an episode. Our goal is to get across X and YouTube. So our goal is to get 1,000 plus before the end of the year. I know we're gonna do it easily, and yeah. So share this with your friends. Get the word out. We're calling out beautiful setups on gold, on ES, on crude oil, on anything you guys want. We're spitting out knowledge. We're calling out beautiful buys in the middle of escalating tensions. That takes balls. You know, no one's we're not doing this because we're getting paid to do it. We're doing this because this is fun. Like this is what it's all about. It's about sharing ideas, analysis, having different viewpoints, feeding off of each other's energies, and conquering the financial markets together.
That's it, man. That's it. That's a beautiful gold shorts, bro.
Beautiful, man. I love it. I love it. Over 5 setups, winning trades called out in the past 24 hours between Kevin and I. So that is just beautiful. Someone start keeping track of that. We need to count. We need to counter on this screen actually.
Jarvis.
Yeah, we need like a Jarvis. Netanyahu says here. So let's go here. Netanyahu says Iranian government destined to fall. Wow. How's Israeli assistance?
Oh.
Netanyahu says Mossad to continue lead role in fight versus Iran aggression. Wow. He's like, yo, Iran's wow, they're destined to fall. Wow, that's crazy. Middle Eastern firms cut. Yeah, we saw that headline. Israel rates may fall faster. Iran ceasefire lowers inflation. Yeah. All right. Awesome. Gold continues to chug away. Let's go. These are great moves. This is how this trade started off. We moved to break even then, and now we are just floating. We got JOLTS. We got job openings coming out very, very soon, my friends, and that's what we're going to be watching out for right here. And you can see on oil that we were talking about yesterday after we had this impulsive move is that if we start seeing correct structure change now on the intraday time frame, as you see, we went from making lower lows and lower highs to now shifting structure. If this continues, oil is going to start seeing more of a bid then, right? You'd start seeing more price action like this, where every pullback gets bought up into new highs, right? And oil steadily makes its way back above 95 and then back to 100. So that's what we would start seeing in that case. And overnight, we did get that development. We got a retracement and then push towards the upside.
Yep. It's not even about the trades, it's about the amount of information y'all give for free. Is amazing. Great work. Hey, we appreciate that, Sid. That's why we say, guys, we ain't asking you guys to pay for these streams. Just share it with some friends, share it to your social media, hype it up, man. This is some great information, great knowledge. And like you said, it's not, some people come in and look for trades. That's great. We're going to give you guys some great trade setups too. But other people who are looking for information that they can trade off, actionable information, this is your spot as well.
Mm-hmm. Yeah, absolutely. Thank you, man. Appreciate it. Thank you. Make sure you throw a like on that.
Yeah, don't forget, follow us on social media, at @market_AI. Is that right? That's our Twitter?
Yeah, that's on Twitter. Our Instagram's currently down because of Meta's ban wave, where they banned a bunch of accounts randomly. But we're working on getting that back up. So follow us on YouTube. We do we do webinars. We do everything long form, short form, Twitter. We give out analysis on Twitter. Make sure you check out our website. We're also live every single day, 8:20 to 10:30 a.m., breaking down everything that goes on in the markets, breaking it down to the point where you could go to macroeconomic professors and they'll have no idea how to trade these headlines or what it actually means and how to actually take trades based off of it. JOLTS.
Yep,
coming
out right now.
Coming out, huh? So we'll load that up. Have it loaded up on your side, Kevin?
Yes, sir.
Yeah, let's watch it. Oh, and gold is JOLTS came out 7.18.
Yeah, you guys hear that? The economy's actually really strong. We're just all delusional. No, I'm just kidding. So there we go. 7.618. Pretty big move there. Higher than expected. It is above the maximum as well. So we can take a look at our brain icon here and see what exactly. Okay, well, that would be bullish on the dollar, which we know is bearish on gold. So hopefully this helps support gold to continue lower. As we see, look at that spike we got to the downside right away. See if this has some continuation and some follow through here. Absolutely killer job, killer trade, killer call out by Nolab. and of course re-entry as well. Good teamwork on that. Tag teaming and beating up gold today. It's what we like to see.
Yeah, 100%.
Give a discount for market. I know we have discount code Kev. We'll save you 10%. You have any other better discount codes for anybody?
Discount code Kev, man.
That's it.
That's
That's it. You guys are gonna have to use Kev.
Yeah.
Awesome, man. What a move.
What a move on gold. Gold is still chugging towards the downside. I love it. Love. Continuing this sell. We're approach 4,500. So let's see how we react here.
Yep. I moved my stops on this to this recent high right here, 45.43. We've been making lower lows. We've been making lower highs. If this structure breaks, then I'm out of the trade, even further into the money, right? This is no longer a break even. It is a in the money trade, a no lose trade, profits only. So it looks clean. Hopefully we get that follow through.
Yeah.
Let's see, what's the NASDAQ and ES doing? So NASDAQ did sweep those pre-market highs we were talking about, starting to reject supply. Now, here's where context comes in, right? Usually as a day trader myself, supply and demand, we short supply, we long demand. But when context comes into play, and I see that we had strength moving into the supply zone, I say, wait a minute, we have strength moving into the supply. We were just at all-time highs yesterday. I do not want to short the supply zone. If anything, I want to see if we could gain momentum above it. Can we get a strong break above, come back towards this recent resistance area, hold it as support, and when we take that higher low, we target the next higher high. Again, trading the trend and trading the context and fundamentals.
Yeah, 100%. Beautifully put.
Gold trying its best to wick back here. Just remember, we had that economic data. Sometimes we get short-term reversals, short-term spikes. Just be patient. Dollar also had a little bit of a spike there too. So we'd want to see that correlate with gold back to the downside on a higher dollar.
Yep.
Nas is struggling off supply. Again, I'm not interested in shorts at this point. Equities are also struggling right now. NVIDIA is pulling back. NVIDIA was able to make its way back to 230 though, which is great. NVIDIA needs to clear 240 to officially be in the $6 trillion market cap club by itself. First company in history to meet $6 trillion in market cap. So something to keep an eye on, right? If I know NVIDIA is making all-time highs, I know NVIDIA is the leader of this whole AI revolution, well, then why the heck would I want to short the NASDAQ, right? We want to trade with the overall trend, and the overall trend is going to give us some insight and clarity, and using things like NVIDIA, Apple, Microsoft gives us that extra step, gives us that extra confirmation and confidence.
100%.
Let's see. Gold. Get back lower now. Don't be messing with us. We want just straight down.
Gold will get there. As I was mentioning, it doesn't matter if gold pulls back up a few points or comes back down. Like it's still in that bearish macro intraday trend, and as long as we're just aligned with it, who cares where it pulls back into? We shouldn't let minor pullbacks phase us out,
That's right. That's absolutely right. Absolutely. 100%. Again, that's where the confidence comes in. If you're in a trade and it's not at your take profit, it's not at your stop loss, why are you getting out?
Yeah.
Have confidence in your trade should not be something that you're just willy-nilly, let me just jump in wherever. Your trade should be planned out, and that's why you should have the confidence to hold.
Yeah. ES is making its way towards the upside, respecting the overnight low that we printed right at the previous demand area. And then gold is steadily making its way to the downside in the lower time frames right now.
Beautiful. Look at that.
Dollar catching a bit of a bid off of the JOLTS job openings.
Yep.
So dollar catching a bit of a bid off that. And you can, of course, go to the economic calendar, load up the JOLTS job reports. You can see that's very bullish for dollar. And then on gold, that's actually bearish. So that's something to keep in mind, is that we came above maximum expectations. This is a hot reading. Outside expected range is higher volatility likely, right? So we'll see how dollar starts moving. But on the gold side of it, is that just going to lead to the same narrative that we were building off of already, that gold bears are just going to play along with the intraday bias and potentially lead us to lower price points of 44.75s. But we're right now sitting right above 4,500, which is also like a key round number that gold likes to respect at all times, right? Round numbers such as 25s, as you can see, this was right at 25, right here. This retest right at 25. This one, we were right over here. Even this one was 44.50s. So all of these make sense. You have to take all these factors into focus and know that, okay, if we're rejecting off of here, it might be short term since we're aligned with the intraday trend, that we're probably going to break this and continue to dig into 44.80s very, very soon.
Guys, don't forget, man, run that like button up. We appreciate you all for joining, for being here. Hit the like button, hit subscribe, hit follow, hit share, wherever you are, YouTube, Twitter.
Yeah.
Show some love, show some support. We're happy to be here. We're happy to do these streams. And it is just example after example every day of just proper trade setups and proper analysis. Really, really great stuff, guys. Also, keep an eye on oil. Oil is now back trying to get above its previous day's close, which would signal a bit more of a bullish move on oil. So again, it's going to give a little bit of a sort of like a ceiling and make it difficult for ES and NQ to move higher when oil moves higher.
Yeah.
Now, we did notice that since the ceasefire, NASDAQ and ES don't really give two craps about what oil is doing. It's just been pumping and pumping and pumping. But we are near all-time highs, so we do want to be a little extra patient. Yo, it's our pleasure. Absolutely. Free trading floor, it is our pleasure, man. We're doing this Monday through Friday, every day for you guys. Phenomenal episodes. You guys are a phenomenal audience. And don't forget, drop whatever ticker you guys are trading. If you have questions, drop some questions too. We're here to not only go over markets and give you guys a proper fundamental analysis of it, but give you that extra guidance, right? We'll be your morning mentors where it's just like you come in, you join with us, do your own analysis first, right? Do your own analysis first, join the stream, see if our analysis aligns to give you the confidence, but make sure you do it yourself too, so you know that you're constantly learning and improving. That is our goal as humans and as traders, every day to get at least 1% better.
Yeah. Absolutely. So even in this gold trade, guys, we approached like 230 pips. That's a ton. That's a great amount of movement. Secure more profits if you haven't already. And we're still expecting more downside over the course of this session. We also have ES pushing into these highs. Again, this is where my intraday trade ideas are aligned right now in these scenarios. I'm not going to buy ES here, expecting it to go into here. I'd much rather wait for a pullback, just as I did yesterday, as this opportunity also presented itself. And so if it does again, A++ setup, A+ setup, A level setup, right? Anything this, if you take a buy here, you're taking a garbage, shitty setup. You don't want to be buying at the highs going into new highs. You want to be buying when there's markets pulling back, when buyers are looking for an opportunity, when sellers are looking to exit. That's what you want to be buying. You don't want to be buying when ES is right at all-time highs, and then you see some sort of escalation happens and you get that pullback that you were looking for, right? Even on gold here, gold, you don't want to be buying when gold has just done 1,000 pip move towards the upside. You want to be selling at that point because you know that on a macro basis, on geopolitics standpoint, that leads to a bearish bias on gold. And now that we have this retracement phase heading in from coming from new lower lows, that this could just be a potential lower high that can continuously drive us lower into here over the course of the next few days and weeks. Remember, this is only the start of the month. The markets are still setting up for the moves for the rest of the month. You can often see that the start of the month here, start of May, we had gold consolidating. Once gold broke out of this consolidation in mid-May, you got clean movements for the rest of May, right? Massive outflows. This is just a pullback, the end of month pullback, start of month pullback, and markets just repositioning themselves for this new business month. So that's always something to keep in mind, is that don't just start thinking it's a bull market now just because you saw this end of month or start of month. This is just orders being repositioned, institutions repositioning their order flow so we can have a great business month. And now imagine this. Now imagine if we start pushing down, maybe rest of rest of June, we just continue towards the downside, reach back into these lows, create new lower lows. And then we're going to look back at this, be like, it made sense. That's what we already know that, because we don't, it's not just hindsight, it's we're prepared for these types of scenarios, whether it's on the geopolitical front or the technical front as well, right?
Absolutely. Absolutely. Somebody said, "What's up, Gold Dust?" Gold doing the same intraday move as yesterday. Sold off on COMEX Open, then started to reverse around 10 a.m. And so, yeah, you know what? I like that, man. It's important. I'm the same way, right? It's important to recognize not just the trend where, oh, we're making higher highs or higher lows, but the trend of the general market structure and price action we're seeing, right? Markets love to repeat themselves. Now, they don't repeat themselves every day. That would be great. But sometimes we will see these patterns, right? That's why it's called pattern recognition trading. It's not just candlestick patterns, but the actual timing of the market. We always talk about timing the market.
Yeah. Yeah.
Probably going to get all out of gold soon. I did move my stops myself, are going to be near 45.40 on GC futures.
Nice.
And we are approaching that at the moment. Still's got a little breathing room.
Nice.
But yeah, nice.
Fantastic trade we called out. Beautiful 200 plus pips. Solid trade on gold. We didn't call anything on ES besides this price point from yesterday to look for buys, which we took advantage of here. And some of the users took advantage of overnight from this point. So we don't want to be taking the shittier setups. We want to be aligned with the most advantage and most optimal areas where buying and selling is best. So just like how we're not buying oil at these highs, we're waiting for more of a pullback, a change in structure to see how intraday movement on oil starts being positioned. So all of this every single day, we're going to stay tuned. Keep in mind, I'm still expecting gold to push down to here. Yes, it's great to look at different instances of, hey, gold pushed up after this, but you're also looking at 2 different days. You're looking at 2 different circumstances. You're looking at markets pricing in this escalation, and then buyers catching a bid from here, driving gold up to a better sell point. And now, whether we continue down here or whether we push up a bit for with COMEX open and then push down, doesn't change the fact that going a sell-off from up here was more likely than a continuation down from here. Like mathematically, and when you're looking at price points and you're looking at actual what is a better offer, a sell from here is way more likely to play out than a continuation sell from here after we have already dropped 1,000 plus pips in a day. That's the difference here, is that you're coming off of buying that's happening after selling has taken place for 2 days versus now selling is taking place after overnight buying. So the opposite of that, yes, we could push up into here, but the probability is that gold could continue down to here and correct this move, because you're not now seeing the buying come after 1,000 plus pips, $100 worth of selling. You're seeing that the buying is just coming after this small sell move. So it's not as advantageous for institutions maybe to get into buys exactly here than versus maybe down here, right? And it's all about that probabilities. Maybe it does happen, and then we get something like this where gold pushes up into here, and this is where you get on the defensive side, where gold pushes up into here, maybe creates a consolidation, and then we get that intraday move later on in the week after NFP or something, right? It's all about these different scenarios and how you can either defend or attack, right? Now, in the case of defense, if you haven't taken profit after 200 pips, now how are you going to defend? Is that if you start seeing lower highs not printing anymore and you start seeing that push up, you're going to start trimming your position. Worst case, you're going to take the break even on this, and boom, you defended yourself. But at least you attacked, aligned with the bias, the macro bias, with the headlines coming in, with the data. We understood this data came in strong for dollar, and inversely, this means that this is going to impact gold. We're going to see outflows, and now we're aligned. All of these ands have added up, and now we're not just focused on single one point of view of, hey, COMEX open 10 a.m. we pushed up, so I'm expecting that today too. Yes, that may happen, but are you aligned with everything else that's happening as well? And if that's the sole decision making, then that's not how I trade personally. That may be how some people trade, just like you look at one confluence and that's it. For me, I want to make sure I have all the clarity I need in order for me to operate with the max efficiency and get the most out of my time in the market. So that's what I mean, is that I'm still holding this position, And I talked about my target from the start of this trade and what I'm expecting out of this trade. And I broke down exactly how I was expecting the pathway of price to play out. And it played out exactly like that. So this is where this is in hindsight, right? Like we walked you through this exact setup and even guiding you in how to manage this best, where to take profit, because we understand what moves the markets. We understand what's going to hold weight. We understand that JOLTS job openings just came out over here and what this actually means for dollar and what this means because this is above the maximum reading. So what this means, and now look at this gold position.
Here we
It's selling
go.
off. Some people, may have been expecting to see this sort of movement right at COMEX open. Well, guess what? 1 minute on gold just made a new low, right?
Levels are important.
And now look where it's headed off into. It's headed off right to fulfill its prophecy of heading into these lows, right? Into this area right over here. So that's what I'm talking about, is that look at that. People need to be aligned on this side of things to open up their eyes and understand it's a game of probabilities. There's things that can happen in a day that are either going to add to the bias or take away from it and excuse me, cause retracements or cause continuations. And it's your job to understand that and then trade based off all those ideas, bringing them together and execute in the market to make some money. Like, don't sit on the sidelines. Don't execute without understanding everything, but make sure that if you're in the game, you're actually playing it, that you're not just a bystander, that you're not just standing around with your hands, sitting on your hands. We got some headlines from Rubio. Was defiance on U.S. foreign policy in first congressional testimony since Iran war. Not much else, huh? Okay, gold. I love it, man. This is a beautiful trade, huh?
Still going. Yes, sir.
Man,
Bro.
let's go. Melt deeper, buddy. Let's go.
Yeah.
75. Let's go. Come on. It's gonna come in a few candles, guys. I'm telling you. That I have this feeling in my stomach right now. In my intuitions. One thing I learned, always trust your intuition, right?
Yep. My price target, I'm looking for 45.15 is the open price for the futures market today on gold. So 45.15, 45.10 is a great price target. Bang, there's new low of day on gold. New York session at least.
Let's go. Come on. Nobody's in the chat. That's what I'm talking about. This is about having high conviction in your trades and holding through and not being a little
chicken.
Scaredy cat markets.
Will be nice.
It's about executing and calling out trade setups and sharing ideas, because that's how we all grow. We don't grow individually. We all grow when we're working together, when we're collaborating, when we're sharing knowledge. There's things that Kevin says that I don't even have idea about, but I'm like, oh shit, that works. Damn, that works well. Like Kevin was yelling at me, being like, hey, 10% ES retracement. It's coming, and 10% is exactly where we popped up, and then Trump came out, and we were all aligned on the same part. Hey, optimism's in the markets. So this is what it's about, right? Look how beautifully we executed on this position, and how many we just caught 300 pips together in a session in less than 2 hours. We all collectively made thousands of dollars together. It was a massive accomplishment. It is that 98% of day traders are on the wrong side of the market. And even with all the war stuff that's going on, we still manage to not only go against what every retail trader was thinking about gold in terms of the buys, and we positioned ourselves from the sells, talking about it right when we started market in the morning. So that's an amazing episode, and I think it's perfect. We end this off here. What do you think, Kevin?
Bro, I think you're right, man. What an episode, a perfect episode, beautiful stream. We're 2 for 2 on the days. We're like 6 for 6 on the trade call outs, and it's Tuesday.
Yep. Yes, sir. Yes, sir. This is how we do it, man. This is what I'm talking about. It's like we come together, we call out these banger positions. We show the viewers how easy it is to trade the financial markets when you have a platform like Market, where I saw the bias, I understood what is causing it. Right, Hormuz blockade fears supports the bias. That's currently what's happening. What could flip it, right? Such as like any ceasefire or any improvements in the talks. I know what the targets are looking like, where we are on the intraday basis, what the highest area we could push off for further selling. And then we dove into the charts and we understood, okay, hey, if we break below here, after an entire night of pushing towards the upside, the probabilities are more aligned that the market sells off from here. And then we executed. As soon as I got the break, I took my entry here. I called it out, Kevin called out another entry on this retest, and now 300 pips later or $30 later, we're down here. So that's what it's about, man. I love doing this, bro. So thank you so much, Kevin, for leading this every day.
Bro, absolutely, man. I'm happy to be the leader, the host here, and to have started Market in the Morning. I remember when we started it 6 months ago already,
Yeah, something like that,
maybe.
right?
And we were just doing Tuesdays and Thursdays. We were like, oh, let's hop on, me, you on Tuesday, me and Jeev on Thursday. Then we mapped it out to Wednesday when we brought Imre on. Imre is fantastic. Guys, make sure you're here for tomorrow's episode. We're going to have Imre on. It's going to be me and Imre. Same thing we were doing here with No Lab today, but me and Imre, we're going to cover pre-market. We're going to cover New York session open, give you guys some actionable trade setups, and see what plays out. Very exciting, man.
Yes, sir. Let's
Every
get it.
day.
Thank you guys so much for joining us. Make sure to check out our website. You can find everything about what we're building and everything that we're doing on market side. As soon we're coming out for all our users, the TradingView integration with market. So this is going to be fantastic where you can keep track of all the breaking news, the high impact news, the bias for what you're trading directly on your screen. You'll even see headlines come out like this. So you'll always be in front of the charts and active when something's going on.
Absolutely. Yes, sir. Luke, let's do it. Let's make some money this week, guys. Cheers, everybody. Have a great day, and I'll see you guys all tomorrow.